Good morning, traders. Welcome to Tuesday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news and a few other things to make sure that we know what's going on so that we're not taken by surprise by anything, so that we're on the right side of the market. As far as the news for today, as we can see, there's not a whole lot. Actually, there really isn't. there really isn't any. But the first small news announcements happen at 8:55. That's the Red Book. At 9:45, we have the ISM New York business conditions for January, as well as the ISM New York indexes. At 10 o'clock, we have the IBD and TIPP economic optimism. That one's always a tough one to get out. And then we also have the 1400 FOMC member Mester speaking and FOMC member Williams speaking. At 16:30, today's Tuesday, so we do have the API weekly crude oil stocks. That'll give us a little bit of an idea of what to expect for the inventories this week. And then at 1800, total vehicle sales. But no big news announcements today, so nothing to really worry about from that perspective. So with that out of the way, let's jump into some charts for today. Today being February 2 of 2021. First up on the list, we've got the NASDAQ, which is having a pretty nice reversal off of the lows. Buyers are continuing with some pretty good aggression coming from the bottom here. And, I mean, really, we had that small little gap down. That was kind of a funky gap, all things considered. And ever since then, it's just been straight up. There have been some very small pullbacks. This ended up only being an L1. It couldn't make it to an L2. Almost. But couldn't quite do it. And now the whole way up, it hasn't been able to pull back at all. It missed an L1 pullback here. Actually, it missed it there, missed it there, missed it there, missed it there, and we've missed it so far inside here. So a lot of buyers are just waiting for the first L1 pullback. Like, come on, to get a little bit of a dip back to the bottom of the channel for buyers to give it a crack. The big thing that you really need to keep an eye on here is this previous major swing. The major swing right here has not been broken as of yet, at least at the time of recording this. So with that not being broken yet, we do not have a confirmed trend shift. We do have a smaller trend shift with this guy getting broken right there. But the big one, that hasn't happened yet. So with that being kind of right on top of an L5, you can see how that can cause some issues here for the buyers if they're going to try to get this to keep going up. So we've got a play for really both sides. For the short term, buyers will be looking to buy the dip. But once we start getting up into these highs on the L5 short side, that's where it's going to get a little bit tricky and see. We're going to have to wait and see what they do. Over on the S&P, forming a phenomenal looking ascending wedge. This is one of those textbooks, beautiful ascending wedges that you get every once in a while that's coming almost fully to completion. And the crazy thing with this is that the completion of this ascending wedge is right at the top of an L5. So you can see how we're building this kind of, the bulls are obviously taking over here, but we haven't really had that transition. And the S&P has the same problem. The major swing has not been broken yet. The smaller one has, but we have not made it above that big one that really proves that there's been a transition. So we're still kind of hanging in this gray space yet of buyers maybe trying to come in, but it's still early. And whenever we're early to the party of trying to catch a reversal, you got to expect some heat. Don't be surprised if all of a sudden we find the S&P and the NASDAQ and some of the others dropping a little bit farther than you'd really want them to today because of that, right? We have not broken that trend shift yet. And as long as that's the case, the sellers still have a shot to get this to flush back down. Buyers have a really good objective if they can start cracking into those L5s and breaking above it. But the major objective is going to be really breaking above those highs and trying to get continuation above 38.63.5. Next up on gold, we have another wedge, but it's a little bit wider. This wedge is nearing the bottom at the moment, and buyers are potentially getting a little bit antsy. One big thing that's standing out here, obviously, is that weekend gap. We had that weekend gap that created this rally to the highs. It ended up being a pretty nasty false rally and then rolled over on itself. So they've come back and they filled the gap. This is where buyers have a shot to kind of resubmerge themselves into the trade. But realistically, why would they want to buy here when we have a structural support a little bit lower, right? So we can see them buying off of these wedges at the base, and if they can slide below that area, then we have an L5 on top of that. Right now they're holding an L4, kind of balancing inside of there. But an L5 slip underneath that wedge, the first break of a wedge is usually a failure. That adds a lot of context for the buyers to try to ping this right back up again and get it back up to the highs. That would be a gap fill and everything they need. That's the perfect storm for buyers to be buying the dip. But big caveat, if it breaks the lows, that's a massive problem. All the buyers are buying down here knowing that they have low probability, right? They're going to be buying down here with stops underneath the base, but their targets are way up here. So risk reward wise, it's fantastic. But if it breaks down, that would be all of those traders getting stopped out. And when it comes back, that's where they start exiting at break even if they didn't stop out. And that usually creates a pretty strong reversal point for a potential secondary dump. Over on crude oil, we finally have some life. This thing seems to have been resuscitated a little bit, trying to get back above into those 54s. It's cracking above all of this resistance that is really, I mean, this has been the brick wall. This whole area, all through these 53s, 54s, this was the zone of concern that we've been talking about where we need to see the decision made. They were trying to make a decision. The sellers were coming in off the highs. The buyers were reaccumulating off the lows. Then we saw the fight gather a little bit closer. Then the sellers started fighting a little bit lower down to try to get that drop. And the buyers successfully defended, and now all of those sellers are getting stopped out and dumped on. This is a squeeze, right? We're seeing the opposite side of things where the sellers tried so hard to get this to rotate down and they got slammed. This is why it's so important to see those confirmed swing breaks. It didn't get it. So with that failure to get the confirmed swing break, well, that shut everything down. All of a sudden now, look at all the breaks that are happening. Confirmed swing break on the highs, confirmed swing break on the highs, confirmed swing break on the highs. We're back up. The market's continuing its trend back higher, and this is nothing more than a two-legged pullback before a continuation. But the sellers gave it one heck of a shot, right? I know for me personally, I was very bearish inside of here, or at least extremely cautious, where there's no way I want to be a buyer up at the top. Now that it's broken above the highs, we've got some proof. I don't want to be a buyer way up at the highs of the channel, but if we can get a little bit of a pullback like a broken L2 or at this point even a broken L3 that lines up nicely with that support, that would allow the buyers a secondary shot to get that continuation. We have all of the ducks in a row now to continue this trend to the upside. Now it's just a matter of waiting for the pullback. Over on the euro, and I guess the level that I was going to be talking about is kind of irrelevant now. We're seeing a pretty nice breakdown here. Euro getting shut down. I was looking for an L2 to see if the sellers wanted to continue the wedge base because this was an unconfirmed wedge low. It's a good example of an unconfirmed wedge low, I guess. I'll use this as a training exercise. But this wedge low is an unconfirmed low because we haven't had the trend reversal, right? I know we've been kind of beating this one into the ground, but this is another confirmed swing that has not been broken, and because that has not been broken, this is not a confirmed wedge low, and now we're seeing it break down even further. So now this gives us the perspective of, even though there is a wider one at play, maybe there's some form of a wider channel like this that they're trying to break through the lows of. We could also be dealing now with a shorter term, wider wedge that's kind of digging down here. Either way, it's still massively overextended, and buyers are going to be buying down here, assuming that it's not going to be able to break down that far, looking for a reversal point back up. One of the safest ways for buyers to be waiting for that reversal is not to be buying the falling knife. Let the falling knife stick itself into the floor, then look to buy after it goes into sideways motion so you don't get cut trying to yank it out of the ground either. Let someone else do that, right? Then let it come back. It's nice coming in a little bit later. Let someone else juggle the knives. I'm not good at juggling. Over on Bitcoin next, we've got a nice move snapping above the midline and 34,000, 35,000 now. This is an obvious break up above some serious structure. There is a lot of resistance in here on Bitcoin coming in right around the midline of the channel. Everything was building up here. We finally cleared above that. This is a confirmed trend shift. Right? Remember what we were just talking about, needing to see that real confirmation? We just got it. So Bitcoin is showing that they're trying to get this to reverse back up. It doesn't mean that they're going to be successful. The major support's down here. But coming off of the midline support, seeing higher lows, seeing a transitional phase of at least an AB equals CD move, we've got buyers giving it a shot. I haven't really gained a huge amount of interest. Let's try that again. Way up here, but realistically, now that we've broken higher, a nice little pullback, buyers will be interested in that third leg up to try to get that L4, L5 for the sellers. And if the L4, L5 sellers fail, then it's off to the races. Then we can start cranking back up to the 39,000s, maybe even all-time highs. This has a lot of bullish potential, but not here, right? I don't want to buy way up at the top. We need a little bit of a pullback because of the fact that we're not coming off of anything major in terms of structure. There might be some shorter term rising support, something along the lines of this, but even that didn't have a bounce off. So you can kind of see how a nice little pullback would be fantastic for the buyers to come back in. And then finally on Ethereum, we have kind of a double wedge. The wedge from yesterday, which attempted to break down, and it really looked like sellers were trying to hold it. You can see them bouncing off the bottom of that wedge over and over and over again. Higher low, they failed, rotated back up, and now it's off to the races. We're getting a complete reversal, and the sellers are getting dumped on. So any sellers who were trying to get this to reverse back underneath, they are now stuck, and we're seeing this squeeze to the upside with all of those stops getting hit. We also have a nice little pullback and a secondary squeeze to the upside. And don't forget, we also have the Ethereum futures right around the corner. So these moves on Ethereum are going to be a little bit more important while that's kind of looming. So with this squeeze to the upside, that's really important. That would show or kind of demonstrate at least that there's a lot of accumulation. And every time the markets come down, you can see there's a massively aggressive base being put in the 1250s to 1300s. And every time it dips into that area, it gets rejected right back up. Still, the closest the market's been able to come to 1,000 is like 1,040, which is kind of what we were expecting a little bit early, but it ran back up to the highs. So realistically, it's doing everything early. The next objective, 1,600s. That's off to the moon. All right, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a fantastic trading day, and until the next one, we'll see y'all then. Thanks.